Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis, whether it might come from something like the economic calendar or a combination of that with geopolitical or headline news. Sometimes even the market sentiment changes, and those who are just watching this may be confused as to why something may uh, good news may be bad news, and so we'll try to give those explanations as to what's going on and why it's happening. A little bit about myself is I'm a loan officer. I do work with a national lender. We do loans in all 50 states, so we can help you with your loans, whether you might be looking to get a pre-approved and buy a next property or looking to refinance. We're here to help you guys out. But more than that, we are here as a resource as well. So please feel free to reach out. We will be more than happy to answer any questions we pose to us and try to get you the information you're looking for. Uh, so without further ado, we'll start off with the economic calendar. We don't really have much today. We got a 3-year note auction, which shouldn't have much impact on the markets today, but let's take a look, see what we got on this week. We got the CPI, which will be a big one for tomorrow. That's inflation data. We also got, let's see here, producer price index, which doesn't have as much weighted impact as the CPI or PCE, but because we've been dealing so much with inflation, they will look at the PPI, which is inflation on the wholesale level, which is the producer price index. So mostly looks like the markets will be closed on Friday. It looks like so. It looks like they'll close early on Thursday, and then Friday they'll be closed for Good Friday. So it'll be kind of a short week this week. But this week mostly looks like, as we can see, our inflation data. So stay tuned. That could be a real volatile week ahead here, since we haven't seen an end to any cap yet on inflation. It seems, and of course, inflation has been more controlled by the supply chain disruptions that we're consistently receiving. It got renewed again when China locked down for its COVID lockdowns again, and that will provide. And then the war, of course, is providing some more supply chain disruptions as well. Um, so again, that's what's kind of driving a lot of the inflationary data that we're seeing of late. Uh, Mortgage-backed securities. Let's go ahead and take a look here. It's not looking again good today. We're still seeing it drop further. We're down 44 basis points, and of course, what that means is that we are going lower, and mortgage rates are rising. So we are seeing another spike in interest rates with this as well. Now, what's driving this? Well, lack of interest by investors. We're not really getting any investors who are interested in buying this. They're finding that their best buys right now are in like your financials and probably even healthcare in terms of stocks. So they're still keeping their money more towards stocks, especially when they're having very hawkish comments by the Fed. Matter of fact, the Chicago Fed, I think it was daily that mentioned earlier today that it's highly likely that the Fed will raise their rate hike at the May meeting by half a point. So we have that. And then on top of it, we have foreign investors that are not investing as well. We had Japanese, um, usually they are a pretty big buyer of ours, and they've kind of pulled back, and that's also having an impact of it as well. It's not the full, this is a part of the equation, but it is having some impact as well. Their appetite is more buying their own bonds versus buying foreign bonds like the U.S., specifically the U.S. in this scenario here. So here's the volatility today. As you can see here, we went way down, then we came back up a little bit, worked our way back up, then we've been kind of going downwards again. As you see, some very big swings here in the day here, and the stock market is also down a bit today as well. So this week, most investors will be kind of looking when we get the Q1 Q1 earnings reports coming out for corporations, and they'll be looking at the kind of what they feel the health of the economy based on those, or at least with businesses. So we'll be having larger impacts based on those. Typically, they come out with the financials, the banks. So this week we should be seeing that as well. So I believe that's either Wednesday or Thursday. We'll see some of those coming out. So stay tuned, because that will have probably the majority of the impact right there. So if the banks them aren't doing as well, we could potentially see a flight to safety mortgage-backed securities or whatnot. So that might help us out a little bit. But in any case, that's what's going to happen of this week. So again, stay tuned. And then of course we see the Treasury shooting up to new highs. I believe these are even past the pre-pandemic levels. These were like since it was 19 levels here, 2.78 here. So if you look here, let's take a quick look. Oh, not quite that way. We're looking, yeah, 2019. So we're reaching levels of 2019 just before that, where we are in terms of treasuries right now. All right. So yeah, 2.78. So lastly, we'll look at the normal rate, or what's the average rate for a conforming loan limit. We'll start off with 30-year fixed, and that is coming in at, let's take a look here quickly as it changes, at 5.06. CNBC was advertising hits 5.25. But in 15 years now at 4.29. So, anyways, it's above 5% right now, and so this is how fast rates are rising. So if you guys are looking to refinance, especially if you guys, most likely, if you're looking to refinance, you're looking to take money out of a property, you might want to do it sooner than later as rates are climbing, and while, of course, appraisals are coming in much higher. Give us a call. We'd love to be able to help you out with those. But meanwhile, you guys, we appreciate you guys watching. If you guys could help us out, smash that like button and share. We would greatly appreciate it. And if you guys got anything, got any questions or anything we can help you guys out with, please reach out. We are here. You guys have a great rest of your day. Thanks so much for watching again. We'll see you guys tomorrow. Bye-bye.